Good afternoon, everybody. We're ready to start this afternoon session. So if you could all settle down, and then we'll get right into things. So good afternoon. My name is Aisha Bedway. I'm a partner with PricewaterhouseCoopers Ghana, or PwC Ghana. And this afternoon we'll be discussing the capital markets in Ghana, the regulatory challenges that we have around that, how we can overcome them, and where we see ourselves going in the next few years. Now, I have today on the panel a number of distinguished speakers, so I'll start introducing them from my far left. We have Reverend Daniel Ogbami Tete. Reverend Daniel Ogbami Tete is the Director General of the Ghana Securities and Exchange Commission, so if you give us a wave to let us know who you are. Next to him, we have Dr. Ernest Addison, who is the Governor of the Bank of Ghana. So, Dr. Addison. Next, Dr. Addison, we have Mrs. Mansa Nete, who is the CEO of Standard Chartered Bank Ghana. And last but not least, we have Mr. Kelly Gajekpo, who is the Group CEO of the Enterprise Group of Companies. So a round of applause for them, please. So maybe before I take my seat, I'll start with the first question so we can get right into the discussion. So the GSC, the Ghana Stock Exchange, was established as far back as 1989, so almost 30 years now, 29 years or so. And to date, we only have 41 Ghanaian companies listed. And which is, there's, looking at the time that has elapsed, there should be actually quite more. So maybe I'll start with Reverend Daniel. Why do we think this is so? How come we only have 41 companies in 30 years being listed on the stock exchange?
Thank you, Aisha. Certainly, I agree that we all expected that we would have seen more listings on the Ghana Stock Exchange. In terms of why we haven't seen a lot of pickup in terms of listings, especially local or indigenous companies, maybe I'll just cite two of the reasons which I think would account for it. One would be the, if you like, reluctance or resistance to disclose information. Now, when you become a listed company, you are required to be more open and to disclose a lot about what is going on with your company, your financials and all that. You open yourself up to a lot of scrutiny. And I would suppose that a number of people will want to stay private and stay in their corner, make their money without all the obligation of disclosing so much information. So that could be one of the things that makes some of the indigenous companies develop cold feet in terms of coming to the market. And then we can also talk about the issue of fear of losing control, because the moment you list and you open up to the public to take shares, you could basically over time, depending on what happens on the market, you get people coming in and even taking you over, So that could be part of the reason why we may not be seeing a lot of energy from indigenous companies towards becoming listed on the market. You can also talk about the cost of listing. When you look at the kind of advisory fees, even though if you do the analysis, it's more cost effective in the long haul if you use the option of the stock exchange to list. But I think these are a number of reasons why we haven't seen a lot of uptake from the indigenous companies. Okay,
so it's a combination of a number of factors. Kelly, interesting to hear from you, from your perspective, being in the private sector, why you think this is the case.
I think I will agree with just about all he said. I'll also add one or two. I think there's a timing factor to the building blocks of the capital markets, almost an issue of chicken and egg. So if you look at the component parts of what makes for a vibrant capital market, you're looking at the supply of financial products that will be attractive to buyers. You're looking at the funds available to buy, therefore the demand for that. And then you're also looking at the regulation that will make it a fair market. I think that the funds available to buy, the collective funds, the organized funds, the institutional funds, are now coming into play more properly. So the stock market, Ghana Stock Exchange was opened in 1990, 28 years ago. If you take your mind to that time, we did not have the pension industry with all the pension money that we now have. We didn't have, or rather the institutionals that could have participated, the insurance companies and so on, and maybe even the banks. By the time their regulators were done with calculating their liquidity reserves and ratios, they really didn't have discretion to do equities. So I think funds available so that people will have the conviction, because I remember back in the day when we started DataBank, half the time the people thought, oh, but there's no money in this market. I'm sure in today's Ghana, that conversation will not be very effective, because truly there is enough money in the market now. And I want to believe also that with a more listening ear at the Ministry of Finance, and I'm talking about the minister and his pedigree in capital markets, we should push and get more things done, because it's a bit of an unknown animal, how it comes together. And we are fortunate now to have a minister who at least has a sensible view on the matter. And I think all the pieces are now really in place. There's another angle to it which we must consider. Historically, I think that the retail end of the demand doesn't understand equities as much as they understand fixed income. So somehow the stock exchange and the policy framework will be such that we should be confident to direct the products to be more fixed income products on the stock market. And you will see that people understand interest. But people, to deal with equity, you need to do equity research. You're talking different things and valuations, and then people just get blurry-eyed and they just go to sleep on you. But if you say, buy this for 10 cedis and it's 2% interest, just about everybody knows what you're talking about. So that is another orientation we need to factor into getting some movement in the market. Thank you.
Thank you very much, Kelly. So I'm also hearing from you is also an issue of some public education perhaps, and breaking things down to a level that is more accessible and practical for people. Mansa, it would be great to get your thoughts as well from where you sit. Could it be a confidence issue as well, confidence in the market, or the regulatory issues? Maybe you could share your thoughts and any other thoughts you have on the matter.
Okay. Thank you, Aisha. I think, so even before I talk about whether it's a confidence issue, I'll sort of step back a little bit and talk about, the benefits of a developed capital markets. And clearly, from the demand side and the supply side, and you look at, the options, it gives investors a lot more options. There are a lot more investments available. And then from the corporate's point of view, they have a lot more options. Is it loans, is it corporate bonds, or is it listing through equities? I'll give you the Singapore example. Actually, Standard Chartered Bank accompanied the government of Ghana to Singapore because the government have an ambition to set up a financial services hub for West Africa. And we accompanied the government to Singapore to learn from the Singaporeans. And if you look at the Singapore story, in 1990, there was a deliberate sort of attempt to develop the corporate bond market. And you look at the period from 1998 to 2004, they tripled the amount of issuances in the corporate bond space to 133 billion Sing dollars. So there are a lot of markets that we can learn from. But I have to say that looking at the regulators in Ghana, so Standard Chartered Bank, we are present in 16 markets in Africa. And you look at the regulators in Ghana, they're a lot more sort of receptive, open, and flexible towards innovative initiatives towards the development of the capital markets in Ghana. And I can talk about a number of things that they have done already in the government bond space or in the corporate bond space that is a lot better than some of the other markets. So if you look at the government bonds, for example, participation by offshore investors. In Ghana, you have about 38% of offshore investors participating in the government bond, compared to a country like Gambia that has 17%, Kenya that has just under 2%, and South Africa that very similar, 38%. But what we need to do a lot more is develop the secondary market. So with those same statistics, in Ghana, if you look at the amount of secondary market trading that we do on a daily basis, it's just about $20 million. In Zambia, the market is totally illiquid, so there's no secondary market trading. In Kenya, on the other hand, it's about 25 million to 30 million traded on a daily basis. And this is mainly from domestic investors. And then in South Africa, who has a similar ratio to Ghana, the trading is about 2 billion done on a daily basis. So what we need to do here is develop the secondary market trading, both for equities and for, and for bonds as well.
Okay, thank you. Hello. Thank you very much, Mansa. Maybe I'll hand it over to Dr. Addison to speak a little bit more about the bond market. We've spoken about equities, and Mansa has made some comments around the bond market. Maybe Dr. Addison can say a bit more around that for us to know what we're doing.
Yeah. Okay, thank you very much for the opportunity. I think that Mansa made a very important point in terms of the development of the secondary market, because you want to be able to go into the market at any time and exit at any time. And if you have a well-functioning secondary market, then the liquidity on the market improves. So that's a very important criteria for the effective functioning of that market. But earlier on, I think Kelly made an important point on and the way he put it was about the prerequisites for setting up capital markets. You mentioned that we've had a capital market for 30 years and only 24 firms are listed. And the question that I think we need to address is, why has it taken us so long to establish the prerequisites for setting up effective capital markets? The issue about the supply and demand for longer-term funds. And he mentioned in particular the recent developments in the pension fund industry. Now, go back 30 years ago in Ghana, and you can see the macroeconomic difficulties that we have. I mean, with macroeconomic instability, you are not going to be able to develop your capital markets. And this is why there has been this policy focus on trying to have the appropriate macroeconomic environment in which you have stable prices, you have low inflation, you have stable exchange rates, because it's only within that context that long-term funds can be mobilized, and within that context you can develop your stock exchanges. So this is the history of Ghana, and at least we've seen some progress in the last 2 years. We are hoping that we would sustain that progress, and that would also, in a sense, influence the sustainability of the pension systems that we have in place. Because your pension systems are not going to survive in a very volatile macroeconomic environment.
All right, Dr. Addison, thank you very much for that comment. We've noticed that on the Ghana Stock Exchange, it's mainly dominated by institutional investors. There are very few individual subscribers and so on. Now, is there anything we can do to sort of, shift the balance a little bit and to encourage that? Maybe I'll put that to Reverend Daniel for his initial comments.
Okay, thank you. So I think in Kelly's submission, he may have alluded to my response to this question. The fact that the level of knowledge or awareness of, let's say, most people about the equity market, it's really not there. If you talk about fixed income, they can deal with it. So I believe that a lot of education, investor education, and I want to say sustained investor education, not having a week of financial literacy or capital market, but a sustained educational campaign. And we should be able even to take the discussion to influencing the current curricula in the educational system, right from, let's say, even primary, just so that people are in a very consistent way exposed to, what it is to invest in the equities market. But another way by which individuals can participate has been the collective investment schemes. Now, if you talk about collective investment schemes, you're talking about the mutual funds or the unit trust. Until we had the regulations supporting them, you could count the number of retail investors on the stock market. But now, indirectly, we have a number of equity funds. We have 34 mutual funds, and if I'm not mistaken, I think about 11 of them are equity funds. So for the retail investors, those who don't have deep pockets, they can participate in the equities market through the collective investment schemes, which in my view is even a better approach because you have a professional manager who can do the necessary fundamental or technical analysis before making the right investment decision. So if we can strengthen the collective investment schemes, ensure that the corporate governance is also strong, I think it's a way by which we can get the retail people, pull them into investing or participating in the equities market or the capital market.
Okay, thank you. Those were really some practical ways for turning things around. Maybe at this point, I'll just invite a couple of questions from the crowd before I continue so that we don't get lost, and because these are really some gems of information that you are giving us on the panel. So any questions? Okay, 2 questions. Is there a microphone? All right, so there's a gentleman here. There's somebody else at the back.
My name is Matt Isie, CEO of a technology firm, EAI Information Systems. To what extent is part of the problem the size of the Ghana market? And if so, are we looking at a regional market that will open it up for a bigger market, possibly more liquidity?
Okay, who would you like to answer that question? Anybody? Okay, Ken.
Yeah. I think size, what is it they say? Size matters or doesn't matter? Matters? I think size will depend on whether you're talking institutional or the retail market. I think the factors that are influencing either of those two are a bit more fundamental. I think for the retail market, as Reverend and I have said, it's got a lot to do with education and people understanding the product. And I think I even agree with Reverend that maybe, particularly in terms of equity, we shouldn't worry too much about individuals going to the windows of brokerage houses to trade, particularly equities. Because once they go into mutual funds, they are even safer and it's a better avenue. Where I agree with you, though, is that, and it may not be only size, but also ability to trade fluidly between. So you're giving yourselves options, and then very soon you have a critical mass. So if we could create platforms that will make other West African country capital markets available, then you are expanding the market and giving more critical mass. The institutionals, they like size. I know there are trading companies, whether even locally, but mostly from outside, who would not be as keen if the ticket size of one trade is not so many dollars per day and things like that. So in that regard, yes, I would agree with you that if we could, but I think it's a matter of getting the platform to work across, and then you automatically lock in the size.
If I can just add to that, within the sub-region, we are talking. So, for instance, we have the WASRA, which is the West Africa Securities Regulators Association. We signed an MOU recently, looking at how we can give access within the sub-region. So, for instance, a broker to be able to trade freely in another market. So, there is conversation going on to ensure that we make the markets in the sub-region accessible. And I think it would address the size question to a large extent.
Thank you, Reverend. We had a second question, yeah.
Hello? Hello?
Yeah.
Well, interesting is about size, but anyway, that's fine. Well, I happen to come from an industry where we actually, I call it the new gold in Ghana, the new gold industry, which is a pensions industry. And I manage a fund which probably is one of the largest in Ghana. But the challenge that we do have way back when we started running the pension funds from 2012, there was an interesting thing that we noticed when I go into a session with a team decide on the way forward regarding investment into equities or the stock market. And I have a very interesting story to talk about regarding the issue of education. So there's a decision to take in terms of an investment, and should we should we do a treasury bill which was hovering around 26%, or we should do the 3-year bond which had just been almost about 24.5. The trustee said, forget the bond. The T-bill is today. We explained the issue of the government moving towards a longer dated and stuff like that. The trustees were like, please, treasury bills. 6 months down the line, T-bill goes down to 18. We go back for a report, and then this. And we said, we listened to you, but here's a case where we split the decision. Part in the longer dated and put part in the bill. I go to another function, and the trustees are chastising the fund managers for having to invest in equities because they've lost close to about 20 to 30,000. They are chastising the fund managers for taking advantage of equities because 120,000. So the challenge really is about sustained. Hello. Yeah. The challenge really is about sustained education. And now the idea about the pension space, we have a whole group of people who really need education in deciding even the investment into the capital space. So the issue about sustained education for me is very dear to my heart. Our firm, for instance, Enterprise Trustees, we round up our trustees, we try and give them a lot more information regarding decision making, because if your trustee does not believe in it, and like an ordinary like you and I, they don't share in the belief of why go into a PE fund, why go into an equity. As far as I'm concerned, like Kelly rightly said, I know if you give me T-bill rate, I'm fine. Here's a case where the education for me is very key. So those of us in the industry, and like the governor rightly said, we do have, just following from what the SCB boss also said, the issue that now the government is very lenient in opening up the area to do with capital markets. If you don't have the pension trustees who understand, we'll still come back to square one where they will not take advantage of these new initiatives. So the education really is also at a certain level, and we believe that it's something that must be done. Thank you. That's just a contribution, not a question, though.
Thank you very much. I think Dr. Addison would like to, respond to that. Yeah.
Yeah, I think the issue he raised is important. Education is important. As you're right in saying that the short-term interest rates relatively higher compared to what the returns on equities will be. In a sense, you're going back to the issue of, the macro, the importance of the macro and the importance of restoring stability so that we can move investments into the longer end. But apart from that, I think the issue of innovation is also important. If you take the treasury bill market, it took a while, the education for that matter, it took a while for the Bank of Ghana to educate the public to be interested in treasury bills, and we even simplified the processes that we were selling treasury bills on tap. In between the auctions, you could go to any Bank of Ghana office and buy treasury bills on tap. All of that type of, simplification of processes sort of carried along the interest of the public in developing that trust in the treasury bill as an instrument, of saving. So I think that there is some need for that type of innovation. I understand there is an alternative market, the stock exchange, where the requirements are not as stringent as the stock exchange itself. I think those types of things with more relaxed requirements would allow a lot more indigenous firms and maybe indigenous banks to be able to raise money on our stock market.
Okay. Thank you for those comments. Mansa, anything from your side?
Just to add to what Dr. Addison said, I think the sustained education is really very important. So with the government securities, for example, the government has adopted a book runner approach to issuing when they're going to issue bonds, so which improves the communication between the issuer and the investor on a regular basis. And then they have town hall meetings with investors to talk about improvements in the economy. They have, non-deal roadshows with offshore investors just to keep them educated on what's going on in the economy. So sustained education is very important for the equity markets as well, to get investors. Because, as you said, the investors, the mindset of investors is to invest short term as opposed to long term. So trying to change that mindset, you need sustained education. And probably maybe setting up of a local rating agency is also quite important, so that then investors have confidence on some of the corporates in Ghana, because they've been rated independently as well. So these are my points.
Okay, thank you very much for your contribution. Okay, I'll come back to you for the questions, but I have one question I have to ask, and the whole of today we've been hearing about the PAC BIA, the PAC BIA. The PAC BIA is the President's Advisory Council on Doing Business in Africa, and they recently recommended that Ghana signs the International Organization of Securities Commission MOU, which would effectively lead to information sharing and security investigations if need be. And this would also involve us amending parts of our securities law. Now, Ghana has been preparing to sign this document for quite some time, since 2007. So it will be good to know from Reverend Daniel, are we any closer to this? I know some MOUs were signed yesterday. Was this one of them? Maybe you can shed some light on that for us.
I mean, what was signed yesterday didn't have to do with IOSCO. So we applied, as Ghana SEC applied, like you said, 2007, and we're not successful. But since then, a number of things have happened. One key one is the fact that the Securities Industry Act has been passed, and that has addressed a lot of the concerns that was raised during the evaluation process. Now, what has happened is that we've set up a technical team within SEC, and in April of this year, we went to the IOSCO headquarters. We'll have a meeting with them to go over the outstanding issues. One key outstanding issue is the power of SEC to have access to bank records. Mm-hmm. And currently, because of confidentiality reasons, it looks like you may have to go through a court, and IOSCO is concerned about that. But we did point out that there is a key of sorts. If you look at the new Banks and Special Deposit Taking Institutions Act 930, there's a provision I think it's 1463, I think, where SEC is listed as part of the institutions that can have access.
Okay.
In addition, we have a signed MMOU with the Bank of Ghana, as well as with NIC and then NPRA, on information sharing. So we are going to resubmit our application, and we believe that before the next signing, they normally have the signing during the annual conference. And the annual conference was held in April, so the next one will be next year. But we believe that we are much closer than when we first believed. In other words, hopefully we'll be able to get through with all these new developments since the last time we submitted.
Okay, thank you very much. It seems as though information sharing is a big thing for us in Ghana, and it will be good to see some of those loopholes closed. So I think I can go back to the audience now. I think there are a couple more questions. I can take 3 more questions, and then we'll be wrapping up. So there's one question here. If the mic could go to this gentleman. One here and one at the end. Thank you. Please go ahead.
Good afternoon.
Good afternoon.
My name is Abbas, and I'm coming from the Western region. I just happen to be the chairman for the Ghana National Chamber of Commerce in the Western region. And my question directly goes to Reverend Obami Tete. When he was speaking, you talked about education, which was also confirmed by Mr. Gajipo. Please, are you a doctor? Sorry, so Mr. Gajipo, sorry. Coming from the Western region and being the chairman of the chamber, there's been a number of occasions that we've had interaction with the Ghana Stock Exchange. We've invited them to the Western region, do some kind of education to the business community and especially the members of the chamber of Ghana National Chamber of Commerce. I don't know how often nationwide SEC and the stock exchange has been doing that, because getting onto the stock exchange looks like a monster. It becomes very difficult and people really don't understand and don't know how to get onto it. As the chairman, we've given a lot of opportunities to the SEC and the stock exchange to even set up an office in the Western region, because information request comes to my table so that people can understand and get on. I've personally made an attempt to put my company on the stock exchange through the GATS, the alternative market, and it's been difficult. So my question goes to you: how often and what are the plans that SEC is doing so that it becomes more understandable to the citizens and the business community, so that they can get on the alternative market and the stock markets as well? Thank you. Okay,
thank you. Reverend Daniel, do you want to take that?
Right. So, as I'm sure you agree, education, or sustained education for that matter, is an expensive proposition. So when your resources are limited, it can cap how far you can go, with education. So in the past, I know SEC has tried, but with the new leadership, one of the focus that we have clearly identified is education, and we are looking at it at different levels. And we are developing a paper to raise what we call an investor protection fund that has education as a key pillar under it, so that on a continuing basis, there is adequate money to cover the length and breadth of the country. So I think I will agree that we may not have done as much as we can due to some resource constraints. However, we have identified education as very important. So we believe that going forward, we'll be able to have a more sustained approach. And we're also looking at how we can partner with the association, the Ghana Securities Industry Association. We think that it has to be a concerted effort or concerted action.
Thank you. I think we had a question. Yeah, okay. Please go ahead.
Good afternoon. My name is Sostenes. I work with Old Mutual. My question is to Reverend, and then one to Kelly. So for Reverend, my concern is that pension funds are increasing, definitely. To what extent are these pension funds finding their way onto the stock exchange? Is it as a result of the NPRA has released quite some amount of money into the system? Where are these funds going? Is it the case that asset managers are not confident to go into the stock exchange because of the limited number of registrations on the stock exchange. I mean, if the stock exchange is not as diversified and one or two should go bust, then what becomes of pension funds into the future? So I want to understand why there is not enough of the pension funds that's going into the stock exchange. And then for Kelly, insurance funds are supposed to be accumulated, aggregated for asset managers and then insurance companies to be able to find themselves where to spend or where to do their investments. Even insurance companies as well are not doing this. Obviously because insurance companies themselves are not able to aggregate a lot of money from the system. Group life, if you watch many other insurance markets, group life is the #1 aggregator of insurance funds that companies that eventually then find their way onto the stock exchange. Group life is not compulsory in Ghana. Even though it's not compulsory, even the law says that every risk in Ghana must be insured in Ghana. We know that there are companies in Ghana who would be insured from their headquarters, or there's what we now call central schemes. And then, so there's a head office in Kenya, and then insurance is pulled from Kenya, and the funds sit in Kenya, and then Ghanaian life insurance companies or insurance companies are left out of benefiting from this so that these funds can themselves find their way. We've spoken about making group life compulsory for quite some time now. What are we doing about that? If we cannot even do that, what are we doing about enforcing that all companies in Ghana must ensure that the lives of their employees that are insured and the risks are placed in Ghana? Thank you.
Sustenance, that was 6 questions in one. So maybe I'll let Kelly go first before Reverend Daniel goes.
So I have to thank you because I think you provided an answer to half of the questions that you answered. But I have to say, if we go back to the beginning, my comments, the thing about capital markets is that it's a system. And if you don't have all the pieces in place, then you're not going to have the full level of efficiency. So you've identified, for example, that group life, which is a very essential, if you like, category of insurance, life insurance in most developed countries, should be made compulsory. Now, after you've collected those premiums and you begin to look for a place to park them, you have to then address the issue of the where. The where is the asset classes. And one of the most, well, we've talked of fixed income, we've talked of equity. We know there are challenges in equity. Fixed income, we think there's a way forward. We've been trained, like the governor said. Truly, the sustained training by the Bank of Ghana, I think, should be emulated by the SEC. Because you can tell that it's made a difference. So there is that bit that needs to be done, which is to say, you found the money, you've got your asset classes, so it gives options and diversity. And then you look at your regulation. I'm not 100%, but I think that in the insurance industry, well, in all industries, there's some level of prescription in terms of guidelines and so on. But very soon, the discretionary money, or maybe even money going into equities, the percentage is small. So that's an issue of advocacy and also an issue of the confidence of the regulator that those classes that the percentage allocation is increased, the system can absorb and the system has the necessary controls. But I'll just say again that you're right. I mean, it's really a system and not all the pieces are in place yet. But insofar as we are doing the advocacy and keeping the regulators informed, insofar as the Ministry of Finance is also involved, I think in a funny way we are sort of bumbling our way into the thing. If we sat down and had a good plan, we would accelerate it, obviously, but 30 years and we've sort of bumbled our way, so we have 34 companies, we now have pension funds, we have insurance companies with some discretionary. But if we plan it properly, we can get even more out of it. The question was?
Yes, and on the pension side, I think the submission by Joe answers your question. You have a situation where you have corporate trustees, or if you like, the asset owners, thinking short term. So pension funds typically should be committed to longer dated instruments. But here, corporate trustees, and maybe it's not their fault because the asset owners are looking at the returns in the short term. So they are hesitating or they are being reluctant to put money in the capital market. I remember clearly that some of us were agitating or making a case to NPRA to increase the allocation to equities. And you know what they told us? They said, look, even the 10% that had been granted wasn't being taken up. And it's because the corporate trustees and by extension the asset owners behind them are thinking short term. They want to see the return on the investment in 3 months, in 6 months. And that is not how to do or how to place pension money. So it calls for a lot of training, a lot of education, a change in the mindset. And I think it's not going to happen overnight. But once there's a plan that will address it, hopefully over time there'll be a change.
Thank you very much. So we have our last question. I think there's a gentleman at the back.
Yeah.
Please go ahead.
Yeah, my name is Ben Aite from USA. My question is to Reverend. What is the SEC doing to incentivize demand-side actors to invest in the capital market? Thank you.
Well, I think when it comes to the demand side, one of the things that we are doing is we want to let the collective investment schemes become more prominent. We think that collective investment schemes is a very important vehicle for the individuals, so the retail guys out there to also be pulled into the market. So recently we've even given education about some innovations that we are ready to accommodate within the collective investment space. The other thing we are doing is, what we are planning to do is education bit to have a more sustained campaign to let individuals out there. We have created a framework for the establishment of investment clubs in various educational, tertiary, and then second cycle, all as a way of whipping up awareness and interest in the equities market. So with education and with strengthening of the CIS space, we think that will pull more of the retail guys in there. We're also hoping to strengthen our, RegTech so that access to information. I mean, currently we are quite manual in a lot of things we do. We've put in a process to digitize our operations. So hopefully, you get to a point where when you're looking for information, it will be easy because, again, information will give confidence to those who are holding the money to make investment decisions. So I think a number of parts coming together, hopefully it will have an impact.
Thank you very much. One more point from Kelly. Kelly?
I just wanted to add that when I spoke of asset classes, I left out a key one which I think is in the process of being developed, but the sooner we conclude, the better, which is properties, real estate. So, for example, today when people want to do financial investments, they think of fixed income, which is your treasury bill, then they do the equities. Well, but there's a whole area of of real estate investment, which can be facilitated if we just get the right framework. Things like real estate investment trust, which I know the legislation is sort of.
Yeah, actually this month we'll be releasing the guidelines for the REITs to the market for feedback. So we are on course to put in place a regulatory.
So that would be another piece that adds, and you will see that the pension fund managers will be very excited. They will begin to develop products around those rules and regulations, and that's money going into the real estate sector. Thank you.
Thank you very much. So as we wrap up, maybe I can ask all of you this question. Where do you see capital markets in Ghana in 5 years? If you could give me your answer in one word to describe where you think we'll be in 5 years as a capital market.
Happy to try. I think that we... 3, very far. Very far. Yeah, because I think that more and more things are lining up. The bits are coming together. It's been a long time, but the bits are coming together, and I expect that, I said it earlier, given the leadership of the Ministry of Finance, I want to believe that there's going to be a little more accommodation, a little more push to grow it further.
Okay. So Kelly gave me 3 words, very far. Okay, Mansa, can you do 1 word?
I don't think I
Okay.
can. I'll try. But no, I think that he said the building blocks have started. For example, the corporate bond market. I think the last year, the largest corporate bond in Africa, the energy sector levy bond, was issued. So if we can just, build on that to develop, the corporate bond market even further, introduce innovative products like derivatives, to help investors hedge their risks, and also innovation. Dr. Addison talked about innovation. We've sort of seen the steps with MTN, the listing of MTN, using mobile money, blockchain, other innovation items to develop the market further.
So the word I'm getting from you is innovation. Very far innovation. Dr. Addison?
No, I think that we will see a market that is more open, not only to domestic investors, but also to foreign investors. I mean, we have a very liberal foreign exchange regime in which we allow free transferability of investment income. Even dividend income are not subject to, restrictions in terms of foreign exchange. And I can see that that type of foreign exchange regime would be pushed to cover the sub-region. We are already discussing it in terms of the currencies within the region. And if we make that type of progress, then you would see that the guy who was talking about the size limitations of the stock exchange will be addressed through the foreign exchange regimes within the sub-region.
Thank you very much. So our market will be open. That's the key word from you. And Reverend?
Well, I also think that given the building blocks in place, we'll see a broad-based participation. I believe that all households, or most households in Ghana, will be participating in one capital market product or the other.
Okay, so you gave me 2 words, enhanced participation. So in 5 years' time, this panel thinks that our capital markets, there will be enhanced participation, it will be open, there will be a lot of innovation, and it will be very far in its development. Ladies and gentlemen, thank you very much for today. Please, a round of applause for our panelists. And I'll hand it over to our MC for the day. Thank you.